It has been a volatile 2 days for the soybean market, with the May issue falling more than $1.60 off its Wednesday through Thursday morning overnight high. Pressure has come from both non-commercial and commercial traders, with some of the selling tied to a statement made by U.S. President Biden. Still, the market remains fundamentally bullish, indicating China will still be looking for U.S. soybeans at some point during the second half of the 2021 to 2022 marketing year. Like many others around the world, I watched U.S. President Biden's press conference Thursday afternoon, waiting to see what additional sanctions would be placed on Russia and its President Vladimir Putin. And like many others around the world, I was left shaking my head with some of the toughest sanctions were left off the table. For now. But I listened closely to Mr. Biden's comments, and I understood he was up against some of the same challenges General Dwight D. Eisenhower faced during World War II as the Supreme Commander of Allied Forces. So I understood, though that understanding didn't help the folks fighting for their country in Ukraine. But it was something else that Mr. Biden said that immediately jumped out at me, something that made me send a message out saying, he just called out China. His comment was something to the effect, countries backing Russia are stained. As I watched the final moments of Thursday's session play out, May soybeans fell $1.11 from its overnight high before closing only 5.75 cents off its session low. Selling carried over into Friday morning as May extended its sell-off 54 cents to a low of $15.9425. What does this tell me? The non-commercial side of the market also heard Mr. Biden's statement, and money quickly started moving out of soybeans. This activity won't show up until the CFTC Commitments of Traders Report, Legacy, Futures Only, released Friday, March 4th, and much can still change between now and next Tuesday when data is collected. But global investors weren't alone, as the world's biggest buyer also heard the statement. One of the first reports I saw Friday morning was of the Chinese government being unhappy with the comment, repeating its view that the United States is to blame for not only what is happening in Ukraine but for meddling in Hong Kong and Taiwan as well. None of this bodes well for the U.S. soybean industry that had finally shown some recovery from the previous administration's Twitter-driven trade war with China. The first half of Friday's session saw the key May July futures spread fall from Thursday's close of an inverse of 17.25 cents to roughly 12.25 cents, indicating commercial traders were also selling futures. This after Thursday's calculation of the CMDTY National Soybean Basis Index, ZSBAUS.CM, the heart of the soybean market, came in at 54.3 cents under March futures, 6.0 cents weaker for the day. For now, our reads on real fundamentals, the NSBI and futures spreads, remain bullish, meaning that though unhappy, China is still expected to buy some U.S. soybeans the second half of the 2021 to 2022 marketing year. The latest weekly export sales and shipments update, for the week ending Thursday, February 17, showed U.S. unshipped sales of 341 MB, with China holding 61.3 MB and unknown destinations 118.3 MB. For the marketing year, total sales, shipments plus unshipped sales, were still running 13% behind last marketing year at the same point.